For more than a year, we've seen some Ferrari models drop in price, while prices for others held steady or even went up. Now though, it seems like almost the entire Ferrari market has hit a pause.
So is this the end of the market break, or are we about to see a new shift?
In this video I'll break down exactly what's happening, what could be next, and what it means for buyers and collectors.
If you're thinking about buying, selling, or just watching the market, this is the update you don't want to miss.
We'll focus on the US mid-engine market, but also have a quick look at the German one. If you want to see the front-engine market update, you need to click over here. In the previous market update, we divided the Ferrari models into 3 categories. In the first one, we included the models that have been plummeting in value during the last years. The second one contained the models for which prices have been stable or even increasing. And in the third one, we included the ones that just changed direction or could change direction soon.
Prices for many cars that belong to the first category, so the ones with plummeting prices, are now showing bottoming signs.
Look at the 488 for example. Over here we have the trend split by the spiders and the coupes for the US market. We can see that prices were falling almost linearly between the summer of 2022 and mid-2024. During the last 6 months though, the trend clearly changed. Depreciation slowed significantly, and something which looks like a bottom is starting to form. Last year coupes lost 4% and spiders 2.1%. The change in the spider market isn't even statistically confirmed, and this means that it could be the result of chance. Obviously, these rates are a big change from the -8.5 and -8.3% that we saw between March 24 and March 23. Moreover, inventory data shows that the car sold relatively quickly during the last 6 to 8 months. Unfortunately, I don't have as much data for the German market. We can see though that last year depreciation was similar. Coupes lost 4.2% and spiders 3.8%. This pattern of bottoming prices is also visible in the F8 market, albeit less profound.
But first I would like to get your attention for today's video sponsor.
One of the most horrific and expensive sounds in the automotive world is the sound of your bumper scraping over the tarmac. It can happen to anyone. Speed bumps, potholes, and steep inclines are everywhere these days.
To protect your car from these dangers, you can install the latest in skid plate technology from Exclusive Motorworks.
This isn't just any skid plate. The Automod skid plates from Exclusive Motorworks are the thinnest on the market and require no drilling, screws or rivets to attach. Each skid plate is designed by 3D laser scanning individual vehicle models to ensure that every skid plate is custom fitted. The skid plate kit comes with pre-applied double-sided 3M VHB tape, making the installation a piece of cake. No drilling or screwing required. You can order a skid plate for your car at exclusivemotorworks.com. Let's have a look at the F8 now. Over here we have the trends for the US market, split by the coupes and the spiders. We can see that prices in the coupe market fell less quickly than before. Last year they decreased by 4.3%. This change is statistically confirmed, meaning that it's unlikely to be the result of chance. Yet, it's clearly a lower drop than last year. In the spider market we cannot see this flattening. Prices decreased by 7.8% during last year. This is approximately the same as before. To some extent, this difference to the coupe market can be explained by the market characteristics. The spiders are 1 year newer and also have a lower mileage. It's then also no surprise that the flattening in the coupe market is mainly driven by the older cars, so the ones from model year 2020. Also the inventory data shows that the F8 market is getting more balanced. We can see that the carried over inventory rate stabilized during last year, meaning that the number of cars that weren't sold within 3 months is stable. Before, this number was increasing. Finally, we can also see that discounts on unsold cars are slightly less negative. Now if we go back to the graph with the price trends and at the German market, we can see that the depreciation rate is slightly lower. Coupes lost 2.5% and spiders 4.5%.
The SF90 has been one of the quickest depreciating Ferraris, seeing rates up to 20%. But also in this market, prices are starting to decline slower.
The bottoming effect though is minor and the least strong of all the models in the video. Most SF90s are still falling quickly, as demonstrated by the high level trend. Coupes lost 15.7% and spiders 15.1%. Rates that are less high than at their peak depreciation, but still significant at these prices. If we break the trends down by mileage categories, we can see that especially the highest mileage coupes, so the ones with more than 1600 miles, are showing a weak flattening of the trend. Naturally, you shouldn't see this as a market bottom, just as an indication that the worst depreciation might be behind us.
Now, as we just saw, many of the models for which prices were declining and fell in category 1 are starting to show signs of lower declines. But there's one exception to this. One of the most recent additions to the Ferrari lineup, and that falls in category 1, is still depreciating quickly, the 296.
It's difficult to say whether it's related to the hybrid drivetrain or simply a natural development. Whatever it is, it doesn't change the falling prices. Data is still accumulating, but we can see that up until now, prices have been falling linearly. Coupes are down by 16.4% and Spiders by 16.2%. Adding the German market to this, we can see that the rate for the coupe was slightly lower over there. Coupes lost 11.6% and Spiders 16.6%. German coupes also have more than double the mileage of their US equivalents.
Cars belonging to category 3, so the 360 and the F430, displayed uncertainty in their trends. It seemed like the trends were changing, and increased monitoring was appropriate here.
Now we can see that some of this uncertainty disappeared from the market. Automatic F430 prices, for example, somewhat stabilized after a small correction during 2023. The low mileage cars were hit the hardest, but now all mileage categories showed a stable trend. On average, the market declined by 3.2%. Adjusting this for inflation, we can see that prices are back at their pre-pandemic level. A strong result. Most cars are below their pre-pandemic level if you take inflation into account. Going back to the result before inflation adjustment and including the German market, we can see that prices are also stable over there. They increased by 0.7%, but this increase isn't confirmed. That brings us to the 360. Also in this market, prices corrected, increasing the uncertainty level. Now, we can see that also in this market, prices stabilized. Last year they increased by 1.7%, but this change isn't statistically confirmed. The stabilization is mainly driven by the cars with a low to average mileage. High mileage cars, so the ones with more than 35,000 miles, continue to drop. Adjusting this trend for inflation, we can see that prices are approximately 5% above pre-pandemic levels. A great result. Going back to the trend before inflation adjustment and including the German market, we can see similar stable prices. They decreased by 0.1%, a drop which obviously isn't confirmed.
Now, for all of the cars that we talked about, with exception of the 296, the market strengthened from a position of weakness or uncertainty. But in the previous market update, we of course also talked about models for which prices have been stable for a long time. The cars in category 2.
First up is the 458. We can see that prices corrected a bit after the pandemic market top, but have been stable after since. Yet, a small difference between the Spiders and the coupes emerged. Spiders increased by 6%, while coupes decreased by 2%. The increase in the Spider market is confirmed, but the decrease in the coupe market isn't. This rapid surge for Spiders is truly remarkable. It's visible in all mileage categories and doesn't seem to be related to any seasonality. Moreover, they've been selling quicker and quicker during the last year. In March, only 20% didn't sell within 3 months. This is way less than the average of roughly 30%. Also, the German market is stable. Prices basically didn't change during last year. Coupes are down by 0.2% and Spiders are up by 0.2%. The other car in this category is the F355. This market is relatively small and the price uncertainty is high. So we'll only have a look at the largest subsegment, the automatic Spiders. We can see that prices have been stable and are hovering between $90,000 and roughly $115,000. There is some fluctuation in this trend due to the small market size. The year-over-year increase of 9.5% does then also need to be interpreted with care. It's not statistically confirmed, and I would label this market as stable instead of increasing.
Let's now aggregate everything that we saw. I can imagine that you got a little bit lost along the way.
Over here we have the latest price changes for the models that we covered, but also the ones that we saw in earlier market videos. This reveals that the Ferrari market for slightly older models is strengthening. Cars from category 1, so the ones that were depreciating in an almost linear fashion, displayed lower depreciation rates. Look for example at the F8 and the 488. For the SF90 this effect is very small and basically not visible in the aggregate numbers. Only when we looked at a detailed breakdown we saw that there are signs that high mileage cars started to depreciate slower. The 296 is exempted from all of this, as those cars are still depreciating quickly. In addition to the flattening price trends for category 1 cars, we can see that the cars for which the price trends were a bit uncertain strengthened. 360 and F430 prices dipped, but depreciation rates are now back to where they were previously. Finally, we can see that the models for which price trends were already strong continue to strengthen. Depreciation in the F355 and 458 market is basically non-existent.
Now the strengthening of the market also means that Ferraris are becoming increasingly attractive compared to other sports and supercars.
Over here we have the US year-over-year price changes for almost all cars that feature on my channel. On the horizontal axis we have the price change compared to last year in percentages, and on the vertical one we have the number of cars for which this change applies. The average decrease during last year was 5%, and most cars lost between 8 and 1%. This means that the 296 and SF90 are still depreciating significantly quicker than the average, despite weak signs of flattening in the SF90 market. Yes, both models are relatively new, and new cars tend to fall on the left-hand side of the average, but at rates of 15 to 16%, they belong to the top 25% of quickest depreciating cars. If you care about residuals, these might not be the best options. The other models that we discussed though, all lost the same or less than the average, making them more attractive options for value-conscious buyers.
So the Ferrari market for slightly older models is doing relatively well and strengthened compared to last year. But is this a natural development because the cars are aging? Or is it perhaps a reaction to the latest models coming from Maranello?
Potentially the hybrid cars are slightly less desirable, but we can only guess. Depreciation rates of 15 to 16% are high. Traditionally, front-engine GT models are expected to have the highest depreciation rate, but even at the peak rate of the 812, it didn't lose more than 11% per year, less than the 296 and the SF90.
So what does this mean for future prices?
Well, all the changes that we looked at are descriptive. The historical trends contain some information about future prices, but cannot predict long-term developments. Moreover, predictions based on the past trends only do not account for external events.
Looking purely at the trends themselves, a continuation of the recent development seems most likely, but this is of course pure speculation. And with that we arrived at the end of the video. Now if you enjoy this data-driven way of analyzing car markets, but would like to see a video for a different car, head over to my channel. Over there you'll find data-driven market updates for a large variety of cars. Can't find the car you're looking for? Let me know the name of the car by commenting it down below in the comment section. Once there are enough requests for a certain car, I'll make a video about it. As always, thank you for watching and I hope to see you in 2 weeks for a fresh market update.